Good morning, everyone, and thank you very much for joining me this morning. This is the morning market review. My name's Russell Shaw. I'm a senior market specialist at FXCM, and you can see my email address, rshaw@fxcm.com. Today is Monday, it's the 6th of June, 2022, and of course, the first webinar for this week. Just want to do a sound check. Can you guys hear me loud and clear? Just if you can, just give me some sort of indication because I'm using new headphones. I'm going to bring up the high risk investment warning in the meantime. Okay, cool. Thanks, Anna. Hey, Howard. Morning, guys. How's everyone? And hope everyone had a good weekend. And if you celebrated the Queen's Jubilee, I hope you had a terrific celebration and a long weekend. And I'm just going to bring up the next slide here, which is our market commentaries disclaimer. And then just lastly, our references. Now I've added CNBC.com back. So last week, Thursday, Friday, we used Bloomberg, which was very good. My preference is CNBC. So we'll just go back to the CNBC morning note. All right. Let's bring up some a chart to look at, just so looking at that slide, and I'll go through the headline, which reads as follows. European markets head for higher open in a week set to be dominated by US inflation data. European stocks are expected to open higher on Monday as international markets gear up for key US data releases, including the latest inflation reading. The positive start for European stocks comes after markets closed lower last Friday after data showed the US economy added 390,000 jobs in May. That beat forecast surprised me. It's certainly a number showing, I think, a fairly robust labor market and interest rate hikes to continue. US and European stocks slid as investors assessed the potential for rising interest rates as a result of the better expected data. Okay, so there we go. The latest US inflation reading at the end of the week will be a key focus for markets. May's consumer price index in the US is expected to be just slightly cooler than April, and some economists are expecting it could confirm that inflation has peaked. The University of Michigan Consumer Sentiment Index is due Friday. That's going to be closely watched by investors, and I do think it's an important series, so I'll be watching that. US stock futures were little changed in overnight trading Sunday after a losing week as investors continue to bet that the Federal Reserve will tighten monetary policy aggressively to combat surging inflation. Meanwhile, shares in the Asia Pacific were mixed Monday as a private survey showed another contraction in China's service sector activity for May. There are no major earnings or data releases in Europe on Monday. Okay. Yeah, I did see that. So Howard's just put up the Bitcoin is shooting up. I'll just show you quite a cool setup that I have here. It just gives me a snapshot of what's happening sort of when I log in the morning. I think you guys have seen this. So here's my Bitcoin sort of right here. So I can see it's shooting up here. So it's difficult to do an analysis on these charts because they're so small, but it's just to get kind of a snapshot of what's going on. So I can see US dollar, sort of these are 4 hours, kind of pulling back a bit. A euro, a little bit of support there. Pound over the last 8 hours moving up. Bitcoin certainly showing signs of bullishness there. So this is quite a cool way of looking at it. Also, I mean, for our purposes, also we want to take a look at the DAX, right? So here's the 4-hour DAX, which I thought was interesting, and that's why the very first chart I've got here is the 4-hour DAX. And I think this is going to be quite an interesting chart just to keep an eye on for the rest of the week. Yeah, it's actually pretty easy to set up, Howard. I'll show you sort of. So what you've got to do is you just drag your charts. So kind of you take this and you'll drag it, say there. and then you'll take the next one and you'll drag it there. And you kind of just build it. It's kind of like Lego, you know. So that's sort of that's how you do it. All right, let's just go back to the DAX weekly. I beg your pardon, the 4 hourly. We're not looking at weekly, we are looking at the 4 hourly. Just take a look at the pattern here, 1, 2, 2, 3. Remember, we always like looking at we just call it the rhythm of the market, you know, just the heartbeat. So 1, 2, 2, 3. And this is the sort of next impulse. The question is, of course, is it going to take out this peak here? Because if it does, then on the 4 hour, then we've got a higher trough, higher peak. So it does look as if we're starting off the week risk on. Okay, so sentiment seems to be quite bullish on the 4 hours. Bitcoin. Well, this is very strong, right? So you've got one slightly different, Howard. Let's just look at the nuances here. It might not in the sort of long run, it might not be a big deal, but I just wanted to show you trough. Let's just put this in here. Trough, okay. And important, because this is it's all definition, higher trough. We want to have some sort of definitions we can use in our work, you know. And if these are not the definitions you want to use, fine, but have some definitions that make sense and work to them consistently. So we've got trough, higher trough. Okay, here we've got peak. I would suggest using these. This is Dow theory, you know. So this is the granddaddy of them all, right? So trough, peak, higher trough, and then of course we're waiting for the higher peak. Okay, let's just go back to that Bitcoin, which there's no doubt is showing strong signs of demand. Just a really slight kind of difference here, and you can see. I'm not sure actually what this means. I've got to think about it, but you've got trough, lower trough, okay, and but you've got a difference here where you've got peak, higher peak. Okay, so it's a slightly different technical setup where your peak is higher over here than the previous peak, but your trough's actually lower. You go back to DAX. Okay, DAX slightly different, higher trough but lower peak, but the swing's not done yet. So let's just assume that we get past this peak over here. This is actually, according to Dow theory, really good, because this is your higher trough, higher peak. If we get past it, that's an uptrend on the 4 hour. You can't really argue that with Bitcoin, according to Dow theory. What we can say for sure is that the downtrend's over. Downtrend must be over on the 4 hour because we've got the higher peak, but we would need an extra leg here. According to the definition, we need an extra leg. In other words, we still need that high trough, we still need that higher peak. And so just a slightly different chart, but it may prove to be something. Let's just keep an eye on that. So yes, Bitcoin's certainly moving. What we can do is we could also just overlay RSIs here. Okay, let's overlay RSIs here just to understand the heat of the market. Okay, let's just see if we can understand the heat of the market on a technical basis, right? So let's put in the RSI. I just want to go over my settings here. Again, no magic settings. I just, I actually found these on Baby Pips, and I like the settings. It's number of period, it's 10, but the way it's calculated is median. What's the median? It's the high-low divided by 2, as opposed to the close. Just gives a little bit more of a gentle, a little bit more of a gentle. And this is pretty actually. We're not overbought either. Okay, so we are having a strong Bitcoin rally. Whilst we can say, I think quite definitively, and I'm talking purely 4-hour, downtrend's over. Must be, because we don't have a trend per definition, but we've got a broken peak here to the upside. So the downtrend's done, and we're not overbought. So instead of maybe sort of thinking of a plunge here, if there's any pullback, perhaps it's some sort of dip to consider. But we're looking at this in a very one-dimensional way. We're looking at this only on one time frame. Well, what we should do, in my opinion, is do a top-down analysis. So it's just the takeaways. I think the takeaways, both from Bitcoin and the DAX charts, we're starting the week risk on. Okay, we're starting the week risk on. Let's go through to our weekly chart. I want to go back to DAX. Why are we starting with the 4-hour? And mate, it's because I just thought this was I thought the 4 hours were looking very interesting. Where's this thing? I just wanted to show you that the 4 hours were looking really interesting. So this is kind of the first thing I look at in the mornings, and so I just wanted to show you that, Anna. But and it's looking pretty strong on a 4-hour. But let's just take a look at it now from top down. All right, so we'll go through to the weekly chart. Again, this is an interesting looking chart. It's actually almost a mirror image of the 4-hour. How so? But let's put our peaks and troughs. Okay, let's get rid of all the line studies here. Okay, so if we just had to isolate this part of the chart, okay, we just have to isolate this part of the chart. It's looking. And remember, now we're at weekly. So let's put this here, and what we'll do is we'll put in the reference trough there. We'll just put it as T. We'll put this as P. Here's a higher trough. Now, what's going to be interesting is if the DAX can take out this peak, because that then puts in the higher peak. That's an uptrend according to Dow theory, right? So this is very, very interesting pattern. Now, take a look at the stochastic. The stochastic is the momentum, right? For trends to sustain, there needs to be a strong momentum. What is a strong momentum? A strong momentum is stochastic staying either in its upper quintile, which is above 80. That's strong momentum to the upside. Or if you're looking for a downtrend, then strong momentum would be the stochastic sticking around in its lower quintile, which is below 20. Let's just give this a second bit. The spot market's just opened, so it seems to kind of put in a bit of a lag in my data. I beg your pardon. Okay, there we go. So okay, there we go, sorted. All right. So we're actually heading towards the upper quintile here. Now, just to show you what I'm talking about. This leg here, you can see very strong momentum. Okay, this is not the way that the formula. Let's just do the formula for stochastic as well, just so we understand. There's no overbought. There's no oversold with stochastic. That's actually the secret of stochastic, and it's the mathematics is so simple but in my opinion, brilliant in that simplicity. The formula for a stochastic is this. So it's high minus close, high minus close, why is this hanging now? I'm just going to give it another 10 seconds. Okay. Let's maybe do it. There we go. I'm just going to do this again. Beg your pardon. Okay, let's do it here. I'm begging your pardon. All right. So it's R minus close, R minus close. That's your numerator. Divided by R minus low. Okay. Now that's the formula. Okay. Where the that is kind of how you calculate your stochastic, and then that will give you the fast stochastic. Then you apply a slowing factor, and then to get the slow stochastic, you apply a second slowing factor. But this over here is the actual formula, and what we do is we use a 15 period. So over 15 periods, we find the high, then we find the current close. Over 15 periods, we find the high and the low. So think about it in terms of just a bar, okay? A bar, which is the same as a candle, has 4 bits of information. So let's just understand the information. You've got the high, okay? Got the high, okay? And you've got the low, okay? Well, that's your denominator, okay? Your high minus your low, that's your denominator. Well, what is your high minus your low? Well, that's what we call range. That's the range of your bar, okay? So if you take a bar and you've got a bar like this, and then you've got a bar like that, okay? And I had to ask you guys, well, which bar has the higher range? Every single one of you are going to say the one on the left, because the high minus the low is going to give you the higher number, right? So it's a measure of range. So that's the first sort of nuance. The other 2 bits of information, because remember there's 4 bits of information. Well, the one we're not going to use, and that's going to be the open. We're not going to use the open, but we're going to use the close. Okay, so let's get rid of the open. The formula doesn't make provision for the open, and in my opinion, that's fine. You don't need it. Okay, so if I put the close here on the range, and I have to say to you guys, so I say to you guys, if I have to say to you guys, is this a strong momentum? Because our close is near the top. You guys would say, yes, it's a strong momentum. If I have to say, well, if our close is here, what would you say? You'd say it's a low momentum. Okay, so the idea here is the stochastic is giving you the effectively where your close is relative to your range. Okay, that's what it's actually giving you, and that's the brilliance of the oscillator. Okay, so I'm just trying to see if I've got the formula right here. In my mind, it's seeming a bit odd. I'm just doing some mental calculations. Bear with me a moment. All right, so let's put in some numbers here. Just let's put this in as 10. put this in as 2. All right, and all right, I know where my error is. Okay, so yeah, I'm just doing some mental calculations. The formula is not high minus low. It can't be. It's close minus low. All right, that's my error. All right, and then let's put in a close here of 8. All right, now let's just throw in some figures here and see the magic of the stochastics. Get rid of this. Okay. All right. So what we have here would be close would be 8 minus 2. Okay. Sorry, I had to correct that numerator. And then the high minus low would be 10 minus 2. Okay. 10 minus 2. And what does that give us? Well, that would give us 6 over 8. Okay, that will give us 6 over 8. So the question then is, all right, what is that in terms of the stochastic? So the stochastic is now going to be 6 divided by 8. Let's bring up a calculator here. And it's going to give you 75%, but let's just bring this up here. Okay, 6 divided by 8 equal there, 75%. Okay, so we're kind of in the so what is 75? So 75. This would be the upper quartile. Okay, because it's either between the range would be between 0 and 100. So it's 75 in the top 25%. It's the upper quartile, right? So that's why this. Let's just now. So what? If you are 75%, if your close is in the 75% of the range, if you are in 75% of the range, okay, of course, well, that's going to be pretty strong in terms of momentum because your close is staying in that upper quartile area. We look at it. We are even stricter. We say, well, 75 is not good enough. We want to look at 80. That's a quintile because then we're dividing by fifths. So if we take out this over here and we say, well, what happens if we are here? Okay. And we say that this is in fact 6. Let's say we've closed at 6. Somebody give me what the stochastic is if our close is at 6 and we've got a high of 10 and a low of 2. Can anybody work that out? What's going to be our stochastic reading of high 10, low 2, close 6? What's the stochastic reading? Okay, so it must be closed minus low. That would be 4. All right. It must be high minus low. That would be 8. Okay. Well, that's going to equal. What's that going to equal? It's going to equal 50, right? 50%. So we kind of neutral at 6. So kind of 50 is neutral. Anything above that would be on the bullish side, would be strong momentum. Anything below that would be bearish momentum. Does everybody kind of follow that explanation? I feel like I added a lot of ifs and buts there. Does everyone kind of follow what I'm saying here? What we're effectively looking at, okay, just let me know if anybody's not following. I feel like I may have overcomplicated that. Okay, what we're looking at is where is our close? Where is our close relative to the range? That's what we're looking at. Can you guys just give me an idea of if you guys are with me there? Okay, we're looking. Are we on the 75th? Are we at 75%? Are we 8%? Are we 50%? Are we 25%? Are we 10%? Okay. Okay, you guys following me? So now we go back to if you're not following me, you must let me know. I feel like I overcomplicated that. Okay, go back to this over here. Go back to this over here. Well, look, we're moving towards that 80%. What's happening to our momentum, right? What's happening to our momentum's heading towards that upper quintile at a time now when we're looking for the to see if we get that higher peak, right? So higher trough followed by higher peak. Now, if we get to that momentum and it holds, okay, then DAX is looking pretty good in terms of value. Okay, so we're going to have to watch. Does this this level here, okay, does this level here, which is I've got the resistance round about the 14 sort of 5 to the 15,000. I think this now becomes very, very important for DAX. I think this becomes very, very important for DAX because you can see there is a serious amount of price resistance there. So what do I mean price resistance? Well, here's support, here's support, here's support, here's support, here's support. Then we have that support becoming resistance. Is it going to be resistance again? Clearly, this is a level that the market has viewed as fairly significant because it's a key reaction level, and it's been a key reaction level since May 2021. And every time we get to this level, there's some sort of reaction, and we're approaching that level. We're approaching that level again. Support becomes resistance, resistance becomes support. Okay, so we just want to keep an eye on that, and that's what's happening with the DAX. So we've got these legs. Okay, we've got the 4 hour that seems to be showing us that it's starting off with a risk on sentiment. We've got the weekly that's saying, well, we're going to try our best now to see if we are if we can turn this downtrend into an uptrend, and if we can do that, well, then perhaps we're getting good companies at really cheap prices. That's what value is. Okay, so that's what's effectively taking place here. Now, that's the technicals, right? That's the technicals. What are the fundamentals telling us? Okay, just before I go for the fundamentals, I just want to have one more check because I've only got very few people answering me. Are you okay with the stochastic? I kind of fluffed it up with the numerator. It's not the high minus close. When I saw the actual diagram, clearly it was incorrect. It's close minus low. So just let me know if you're not good with that. Just go into Investopedia or something. Go into Wikipedia. Just type it in. Okay. Okay, good. All right. So Anna writes here, but with all this geopolitical risk, she just can't see how there's so much confidence. There's so much inflationary pressures, and I would be, you know, probably on the same page as you, Anna. You know, I would probably be on the same page as you. I think one way that we can, of course, keep an eye on this. Let's go through to, of course, our trading view. And the US 10-year is certainly, I think, a bugbear in terms of present values. And the Bund now. Okay, so if we're looking at the DAX, what's the Bund doing? So we'll just put in the Bund. Okay. And the reason you're getting such weird readings like this is because it's logarithmic. On a percentage chart, you don't need logarithmic. Okay, you need logarithmic to turn a price chart into a percentage. But you can see here that this red horizontal here, that's where it was 0. Okay, we're currently at 1.25. Okay, so the Bund's increasing. So the Bund's increasing. Take a look at the momentum of the Bund. The momentum of the Bund is very strong. Inflation out of the euro area, we're over 8% on a headline basis. We are, I think, at 3.5% on a core basis, which is high. And we probably get, in my opinion, we probably get 25 basis points in July. I think we're going to, in September, get probably 50, depending on sort of the negotiations within the ECB itself. But this, I think, is very much a focus. Let's just go back to Anna's comment here, which is, with all the geopolitical risk, I just can't see how there is so much confidence, so many inflationary pressures. So let's just try and break that down into a function, into something that's potentially measurable, but very much based on assumption. But I think it will go a long way in helping us. Okay, I'm going to just clear this out. I want to show you, of course, we're not going to do any more math. Okay, we won't. But I do need to show you a formula. So the formula is just, let's just put it as dividend. Okay. Dividend 1 plus, we're going to work on this R. This is what I want to work on, 1 plus R, which I think you guys are starting to get familiar with, to the power of M. And that's effectively going to give you what we call a present value. Now I know this is very early on, it's very early on a Monday morning to be doing this. So just bear with me, because Anna's question is pertinent. This here R is where a lot of the models adjust. That R stands for a required rate of return, not interest. It's required rate of return. Okay, required rate of return. Okay. So what Anna, I just want to read her comment again. With all the geopolitical risk, I just can't see how there is so much confidence, so many inflationary pressures. So everything she said there, everything she said there is included in R. Everything. Okay. So what she's saying is R is adjusting, and if there is geopolitical risk, if there is inflation, the direction that R is adjusting is probably upwards. Now I'm just going to stop there. Okay, R is adjusting upwards. R is adjusting upwards. Okay, R is adjusting upwards because it's required rate of return. If there's more risk, well, in order to induce me to take on that risk, I want more of a return. I have a higher required rate of return. Otherwise, what's the point of me taking on this risk? You must pay me for this risk. Risk means that I might not get paid for it. Okay, that's a different story. But I still need to get rewarded for the amount of risk out there. Again, I'm going to ask this question: is everybody okay with that explanation? Is everybody okay? I know we're doing a heavy session. I actually wasn't planning to go this heavy this morning, but it's the way that the webinars, the direction is taken. Okay, does everyone understand that what Anna is saying is correct, and that the adjustment has to be taking place on the R side, and the adjustment's moving upwards? Does everyone understand that? Just give me a yay or a nay. Howard says yes. Howard changed it to sort of. Okay, Rob, Anna saying yes. Okay. Now, I said we were not going to. Lisa says vaguely. Okay. This is the last. No more. One more very simple mathematical fraction, and then we're actually going to leave this, and we'll revisit this later in the week. So let's assume that the dividend you're receiving is 4. Let's assume that you're receiving it's 4, and whatever our variables are at the bottom, let's just say it's 1. Let's just say it's 1. Okay. So Lisa, if I had to say to you, given that our dividend is 4, given that our denominator is 1, what's the present value? You're not going to have any sort of hesitancy. You're going to say, well, Russ, 4 divided by 1 is 4. So your present value is 4 here, just as example. Now, what we've said here, Lisa, is that R is adjusting upwards. In other words, the denominator, think about it this way, denominator is adjusting upwards. Well, if denominator is adjusting upwards, what happens if it's not 1? What happens if it's 2? Just because the adjustment makes it from 1 to 2. Well, let's do that. It's 4 divided by 2. Well, what does that make the present value? That makes the present value 2. In other words, fundamentals adjust on the denominator side. And if the denominator side is getting higher, it's going to put pressure on our valuations. Anna's saying that, well, there's such a lot of risk out there. And I say, well, if there is risk out there, and I believe there is risk there, then R has to be adjusting upwards. If R is adjusting upwards, then the present value is probably under pressure. So that's something we need to keep in mind. Okay, we're not going to do more than that. All right. If there's any questions, just email me, because I think this is an important part for us to understand. I think we must understand this, because I want us to be, I want this webinar to be sort of really useful, I guess. Just email me if anyone's got problems here, and you'll email me there. But the idea here is we've got interest rates moving up. Now, R, incidentally, includes interest rates. So just the mere fact that interest rates are moving up is telling you that R is adjusting upwards. Okay. So Anna's saying, so what you're saying is that the market participants are prepared to take the risk because the return has gone up. That's such a brilliant question. All right, it's very interesting the way these webinars evolve. All right, let's just go back. So let's just clear this all off. So the answer to your question is, Anna, and it's that was a brilliant question. Okay, we are market participants. We are market participants, okay? We market participants, we require a rate of return, okay? Now, I think everyone agrees with that. We also risk averse. Generally, it's very odd. It's very odd to find somebody that's an actual risk seeker in the financial markets. It means that they don't care about the risk. They'll just go for anything that's got the high. It's very doesn't matter what the return is, but it's very unusual for people just to actively seek high risk despite the returns. Very unusual, right? So the idea, we are market participants. We require a rate of return. We are risk averse. So if we are risk averse and risk is going up, we want a higher rate of return. Well, that has to, how do we get a higher rate of return? There has to be an adjustment somewhere. Has to be an adjustment somewhere. And that adjustment takes place in price. Let me give you an example. I know this is high level stuff, and apologies, and I know it's a Monday morning. Let's just say there's a company, again, I'm just choosing Apple because we all know Apple, it's just for educational purposes. Let's just say Apple is trading at $1,000. Let's just say it's trading at $1,000, okay? And let's say that the risks increasing in the market, just general market risks increasing. You're not going to be prepared to spend $1,000 on a market that's got higher risk. But if Apple's price comes down to $500, okay, well then you'll say, okay, wait a second, the price is adjusted. That maybe gives me a better chance for getting the return that I need. The adjustment's taken place. So the price is the adjusting factor. That's the variable that adjusts depending on how just how risk is interpreted. Okay, Anna just writing hasn't really understood it, and she just can we just turn the taps off? Sure, we can. All right. Anyway, we've started the ball rolling. Give this a think. I'm going to put it on the Telegram channel, and you can go over it. All right. Let's go back to our. All right. Let's go back to the technicals here. We're heading towards what looks like a key level. If it takes out that key level, then we get the higher peak. In other words, you know, the price has dropped. Maybe that's induced the people to come back into the market. Let's take a look at let's look at the daily chart. Okay, so the daily chart is in zone 1, and you can see here on the hourly, it does look as if the hourly does have that risk sentiment coming in. Okay, it all now, if the stochastic sticks in the 80 area, then I think we might take out the R1. Okay, so let's just, I think, conclude at this point, because I have unintentionally made this a complex webinar. My apologies. Just look at it on the Telegram, break it down, see if you you know, can pass it through, and then send me questions. Again, didn't mean for it to be that complex. The concluding remarks that we'll say, is that the hourly chart looks as if there is a signal, a trigger 1. Does look as if there's a trigger 2. Now it's all about the momentum holding. Okay, if the momentum holds, okay, then I think that the risk sentiment continues. However, if it drops out of this 80 area, then I think this R1 level is proving to be quite resistant, possibly because of all those factors that Anna suggested, the geopolitics, inflation, etc. If that is the case, we go back to the week. Well, maybe this level that the market's taking such keen notice of, maybe that's going to be a reaction level. So we kind of not out of the woods yet. I'm going to leave it there. Any questions? Go ahead and type those in. Again, I know heavy for a Monday morning. I'm begging your pardon. All right, let's wrap up here, and we'll do it again tomorrow. And okay, cool. Thanks, Howard. All right, guys. Have a good day, good evening. We'll chat tomorrow. Cheers, guys.